Hello and welcome to Market Vision, your daily dose of market insights. Today, after the extended weekend, we again see a strong rally in Indian markets while the global markets take a pause. Let's dive into the details. Indian markets are on fire. Nifty jumps to 73 points, around 1.15%, as bulls are in full control. Even Sensex rallies 855 points, roughly 1.09%. There has been strong buying across the sectors. Broader indices as well shine. Energy and oil and gas lead the charge, which was up 2.5%. PSU and banking stocks rally around 2.4%. All the banking sector was in high demand. IT stocks climbed 2.29% because there was a tech rebound. Realty gains around 2.25%. There was a positive sentiment in all the property stocks. Auto and metals rise 2.1%. There was a strong buying in the heavyweights, and also there was a news that India is going to put 12% anti-dumping duty on certain Chinese imports, typically to ensure that the steel industry is not impacted. That is when we saw good rise in the metals too. On the global markets, it has been taking a pause. Asian markets were mixed. Nikkei was down 1.3% due to profit booking. Shanghai was up because of mild gains of roughly 0.45%. Hang Seng was closed today due to market holiday. On the European markets, it was shut for Easter Monday. That is when there was no trading. On the US markets, there is a lot of pressure that we have been seeing. So Dow Jones is down 1.76%, S&P 500 slips 2%, and Nasdaq plunged 2.4% as we speak. So all the tech stocks are dragging the Nasdaq. Now let's understand from the perspective of charts and open interest. So this is the Nifty daily chart. So as you could see, we have clearly crossed the previous resistance, and today there was a good buying momentum that was seen roughly from 10:30 or 11 a.m. odd. So from there we saw a sudden surge in the market, and it continued to rally and somewhere inch towards the previous resistance levels. So until here it was a easy ride for Nifty. Maybe from here 24,200 odd levels till 24,800 odd levels, it is going to be a difficult rally. So as you could see that in just 4 trading sessions we jumped around 1000 odd points. So from here there is just 600 odd points to achieve. However, this resistance remains to be quite difficult for Nifty, at least for a week or 2 weeks time. So we might see some choppiness in the market despite maybe certain European markets and Asian peers doing well. It might be difficult from here on for the Nifty to rise further the way how it had sharply rebounded from last previous 7 to 8 trading sessions. Now, maybe someone who is willing to look at straddle kind of positions, considering that the market is expected to be in the consolidation phase, will be able to take it, because as we had seen previously, immediately post the tariff announcements, delayed in the tariff announcement, we had seen that the spike in the VIX from the range of 15-16 odd, it had approached towards 22. So that is when, despite high VIX, we immediately saw a swift up move. Now the VIX from 22 has fallen down to 15 odd levels, right? So the rally might continue until the VIX falls down to roughly around 12-13 odd. So maybe by reaching 24,800 levels, we might see somewhere VIX coming down to 13 to 12 odd levels. So since it would have already rallied till this level, maybe we might see a good consolidation happening um, until we further see the markets, rebounding from there. So from our consensus, it is very clear and evident that from here onwards, we might not see a swift rally towards 24,400, 24,800 or 25,000 levels. So we might see some consolidation at this levels, and then maybe if that sustains, we might swiftly again start moving up towards 25,500 odd levels. Maybe this is possible only in the May month, either in the start of the May month or towards the end of the May month, because the consolidation might be there for at least 2 to 3 weeks. Okay, now let's try and understand from the perspective of open interest what it says. So at all the higher levels, we see there have been good additions in the call open interest. Similarly, at 24,000 levels, we see a strong support that has emerged from the put writers. There has been a good positions that are held at 24,000 on call side too, but this might easily be taken down because already we are above 24,000 levels, right? So this is already giving a pressure to the call writers. And on the higher side, if we see 24,500 levels is where we had seen some 30 to 40% additions in the open interest, and significantly higher we see at 25,000 levels. We again see the built up in the open interest on the call side. Now until 24th expiry, it seems to be difficult because we are left with only 3 days. So in 3 days, 25,000 levels approaching seems to be difficult. That is when we see strong spikes in the open interest additions, at least at the 25,000 levels. So it seems to be difficult to cross beyond 24,500 levels given the kind of choppiness that we are expected to see beyond 24,200 levels. That is when immediately when it tried approaching 24,200 levels, we saw some resistance coming in, and that is when there was a drop in roughly around 60-70 odd points, right? So today already being the US markets down by 2%, so we might not see any bounce from here on. Maybe for 2 to 3 trading sessions, we might close in the range of 24,000 levels to 24,500 levels. So this is the range in which the Nifty is expected to trade. Majorly, the expiry is possible, uh, in the range of 24,200 to 500, or if tomorrow there is a big turnaround that is happening of roughly 100 points, then we might see the expiry might not even cross above 24,200 odd levels. So tomorrow's market we might see a good further spike in the call open interest additions. So once that happens, it will put a lot of pressure and not let Nifty cross beyond 24,200 odd levels, and that would act as a quick and immediate resistance for Nifty. So from the PCR front, it is 1.1 overall, which is positive, and at the money it is 0.93, which is again mildly bullish to positive. So the stance for us is going to be this 500 points range. So as long as Nifty trades in this range, we need not to worry. We might not see any spikes. Once there is a strong momentum that comes beyond 24,500 levels, that is where we have to worry for the 24th April expiry. So until then, we are going to trade in a tight range bound of 500 points. Now let's understand from the perspective of Sensex. So compared to Nifty, Sensex did rally, but there was not that positivity that we had seen. So immediate resistance for Sensex is somewhere at 80,000 odd levels. So we are just around 600 points away from that resistance level. So we have smoothly crossed the previous resistance of 78,800 odd levels. Now we are roughly 600 points above those levels, and we might, trade in the consolidation phase, at least, by tomorrow's trading session, because there is an Sensex expiry tomorrow. Instead of volatility, we expect that from where we previously closed, like 78,800 levels, and roughly around today's high of 79,400. So we might trade in this range, and the expiry might happen close to 79,000 odd levels, either 79,000 or 78,800 or 79,100. So the expiry might, be traded in this 300 point range from 78,800 odd levels to 79,100 or 200 odd levels. So in this 400 point range itself, Sensex is expected to trade for tomorrow. So there is no much, high expectations of positive momentum due to expiry tomorrow, and there may not be volatility because we have already seen good rally that has happened, all the days, in fact, uh, for the Sensex expiry. So tomorrow we can expect a consolidation. Let's understand from open interest. So there have been good additions in 79,000 puts, so which will act as a strong support, and there have been small positions that have been built until 79,500 odd levels, right? So the expectation is that tomorrow we will surely see good pressure coming in because of the world markets not performing that well compared to the Indian markets. We are any which ways disconnected with the world markets. However, this might, maybe today's fall in the US markets might add to some pressure to tomorrow's expiry trade on Sensex. So we have also been seeing a good additions of, 60% in the open interest that has happened alone today in 79,500 calls. So there is also some addition that has happened at the lower levels of 79,200, 300 and 400 odd levels. So which might again, put some pressure on Sensex to not cross beyond those levels. That is when we had clearly mentioned that we might trade in the range of 79,000 to 79,300, or from 78,800 levels to 79,300 odd levels, and expiry is expected to happen in this 300 point range of 78,800 to 79,100 odd levels, given the pressure that we can expect tomorrow. And at all the higher levels there is good, support that we can, expect at 81,000 levels, which is, quite far away. There have been good additions that has happened. So all this strikes will expire, at zero. So from the PCR front, overall it is 0.6, which is not that bullish, and at the money it is 0.86, which is, mildly bullish to positive. So for tomorrow's trading session, just a 300 point range is what we will be targeting, and expecting the Sensex expiry to happen below 79,100 odd levels, or in the range of 78,800 to 79,100 range. Now on the banking stocks, we had already seen a lot of positivity, and we very clearly told that this resistance of previous 52-week high will easily be taken out, because all the banking stocks had performed well, and HDFC and ICICI results were out. So that is when we had seen good 2% and 1% rally in both HDFC and ICICI Bank, and there have been other banking stocks too where we had seen good momentum. So Bank Nifty has already made a new 52-week high, and this might, this rally might continue to move further higher, because there have been a good sectoral change that we had been seeing. So all this while there have been, good rally in certain metals and tech stocks. Now there have been good change in the sectoral indices that had happened, and a good positive momentum had been seen in banking stocks. That is when all the banking stocks are more attractive now, and that is when in just 8 trading sessions we have rallied roughly around 6,000 points. So roughly around 12% is what the rally that we have seen, which is phenomenal in itself. And that is the reason financial services sector and banking stocks were the first one to touch the 52-week high and close above those levels and create the new 52-week highs. So banking stocks remain or continue to be positive, and we might, do really well in the closing expiry for this month, as well as in the next May month expiry too. So there is a higher possibility for banking stocks to move up, which might lead the charge and take Bank Nifty towards 57,000 odd levels in the May month alone. So there might be some range bound, trading that will happen for maybe 1 or 2 odd week in the May month for banking stocks too, because that would be some breather space that the banking stocks would take, and then further there would be a new 52-week high that we would be seeing. So by the end of June, we might surely close above 58,000 levels for Bank Nifty. So this is something that we are anticipating, which is just 300 points away from this range. Uh, Roughly around 5% move could easily be expected in the banking stocks from here on. Now let's talk from the perspective of open interest. So at all the lower levels, we see there is good unwinding in all the uh, call open interest positions. So this is very evident, and in just a single trading session, you could see as banking stocks or banking indices is moving up, we are seeing strong support being taken at each higher level. So as you could see previously at 54,502, we had seen strong support and good open interest positions that were taken. Today again, we rallied roughly around, 2% odd, and that is when immediately we once we crossed 55,000 levels, we saw a strong open interest additions that were seen in the put options, which will act as a strong support here on and not let the bank nifty to fall below 55,000 levels despite the choppiness in the broader indices like major indices like nifty and sensex. So banking stocks is something which is holding the nifty and sensex too. So as long as we are above 55,000 levels, there is nothing much to worry. And the monthly expiry is also expected to happen above the 55,000 levels. That is when we are seeing a strong momentum and support that is emerging at 55,000 levels from the put writers. Now, if you look until 55,500 levels, there has been, good open interest additions just which were created today. All these positions were almost like negligible, zero. There was no open interest additions or no open interest at all at 55,100 levels, 200, 300, 400. All these positions, open interest positions, were taken alone in today's trade. So if Bank Nifty stocks held their highs and continue to sustain 55,000 levels, then we might soon see it crossing and inching towards 56,000 odd levels too. Maybe we might trade in this range of 55,000 to 56,000 levels for this monthly expiry. But yes, there is a strong buying momentum that is expected further to continue from the monthly expiry, and which will lead the banking stocks to the higher highs and make the 52-week high which will also lead the bank nifty to move towards 57,000 odd levels, which is what we are anticipating in the May month expiry. So on the PCR front, it is 1.2 overall, which is quite positive, and at the money it is 0.78, which is still considered bullish. On the financial services sector, FINNIFTY 2, we have seen good buying momentum, and we are already around you know 2%, 1 to 2% above the previous 52-week high of around 25,000 odd levels, roughly around 4-5% above. So this is quite positive in itself, and in just 8 trading sessions, this rally has come in. So roughly we rose around uh, 13 to 15% odd in the FinNifty in just 8 trading sessions. So now, if you see, somewhere there have been selling that was seen at the highs. So maybe for next 2 days until the monthly expiry, we might see some consolidation that would emerge in this range of around 26,000 to 26,500 odd levels. So in this range, we might see some choppiness coming in, because the world markets are also not that positive, and we had already seen a good rally from very low levels. So we might see some consolidation coming in, at least for the monthly expiry, and we might trade in this range of 26,000 to 26,500 levels. In this 500 points itself, we might close the monthly expiry. Now let's talk from the perspective of open interest. So at the lower levels, we see some unwinding that is seen in the call writing. However, on the put side also, we do not see much strong support emerging. Yes, there have been some additions at every 100 points, but this might not act as a strong support. If we start seeing FinNifty, maybe falling 100, 200 points, we might swiftly see call open interest additions being built. So once that happens, then maybe it will put a lot of pressure for FinNifty to not cross beyond 26,500 odd levels. So as long as 26,500 level sustains and acts as a resistance, then we might close in this monthly expiry below to that level. So there is no buying momentum from the put writers at the higher levels, at least from the April monthly expiry. But in the May month, since we have already been seeing all the financial NBFC stocks have been really doing well. The quarterly results are expected to be announced for major of the NBFCs. So like Bajaj Finance, Bajaj Finserv, if those remain positive, then we might again continue to see a good rally coming in the FinNifty indices too. So we might target and expect FinNifty to cross above 27,000 levels by the end of May expiry. From the PCR front, it is 2.5 overall, which is very bullish, and on at the money it is 0.5, which is not that positive. So today, as we had already seen some selling that was coming in at the higher levels. So for the next 2 days, we might continue to trade in the range bound. Lastly, let's understand what the FIIs and DIIs have been doing. So on the index futures, FIIs are short by 77,000 positions. On stock futures, they are bullish and continue to hold 17.56 lakh contracts. On call options, they are long 1.69 lakh contracts. However, on the put options also, they are long by 1.73 lakh contracts. So net, it is not bullish nor bearish. So they are not at all holding any positions. That is when it is indecisive in nature. So they are neither long nor they are short on the index options. So on the proprietary traders front, if we see on index futures, they are negligible short, which will not make any decisive sense here. On stock futures, they are again mildly bullish and have been holding long positions for 1.46 lakh contracts. On call options, they are short by 34,000 contracts. On put options, again they are massively short by 1.96 lakh contracts. So overall, net if you see, uh, since they are short on put, that means they expect positivity to be there. So markets are expected to go long is what their biasness is. So net they are holding 1.58 lakh contracts, which is quite bullish. So now let's understand from the perspective of retailers client. So clients on index futures are mildly long, which is not going to make much difference. On stock futures, they continue to hold long positions for 17.43 lakh contracts. On call options, they are short by 1.35 lakh contracts, and on put options too, they are short by 40,000 contracts. So net on index options, the retailers are short, and this is to the advantage for the proprietary traders. So proprietary traders are long, and client or retailers are short. So if tomorrow the markets open lower, maybe the retailers are going to eat up the long positivity of the proprietary traders. So on the cash markets, DIIs are have taken 247 crore positions in the cash market, and FIIs have been long by 1970 crore in the cash market. So overall, both domestic institutions as well as FIIs are positive. So as long as either of the institutions are long and have been taking positions in the cash markets, we will continue to see the uptrend in our indices, and that positivity might continue to trade uh, in our markets despite the world markets not performing well. So since both the institutions are long, there is nothing much to worry. So we may not, get any shocks with the, huge downfall in the indices. So the key takeaways for today's market is Indian indices outperform, whereas global markets consolidate or are trading in negative. So major performance is seen in banking, energy, IT, and realty stocks for today. US tech sell-off continues. Uh, Not sure if this might impact in our Indian market tomorrow, given the Sensex expiry also. So we expect the Sensex expiry to be much calmer tomorrow, and we might not see any volatility coming in. So that's it for today. If you enjoyed this update, smash the like button and subscribe for our daily insights. So hit the bell icon to ensure that you stay notified. So let us know in this overall rally of 8 trading sessions, were you bullish and did you make money? If yes, do comment us. Until tomorrow,